Nokia Corporation is at a transformative moment in 2025. Once known predominantly as a mobile phone giant and later a network equipment stalwart in 5G, Nokia today is making a bold pivot into the era of artificial intelligence, edge computing, next-generation connectivity, and data center networking. The shift is underscored by one of the biggest pieces of news in the telecom sector this year: Nvidia's $1 billion equity investment in Nokia and the launch of a strategic partnership aimed at building AI-native radio access networks, or AI RAN, for 5G Advanced and 6G. The announcement sent Nokia's share price sharply higher, reflecting market belief that this is more than just hype. The partnership gives Nokia a strong endorsement, access to Nvidia's cutting-edge compute infrastructure, and a roadmap into next-generation network infrastructure where AI meets connectivity. Under the agreement, Nvidia will subscribe for approximately 166 million new Nokia shares at $6.01 per share, representing about a 2.9% stake in Nokia. Nokia will use the proceeds to accelerate its strategic programs: software-defined radio access, data center switching, and optical networking aligned with AI infrastructure. What exactly does this partnership entail? Nokia and Nvidia will co-develop AI RAN solutions. Nokia's AirScale-based stations, modular RAN architecture, and Cloud RAN software will be integrated with Nvidia's Arc Pro compute platforms, enabling network operators to run both communications and AI workloads near the network edge. This means for the first time, many of the functions that today reside deep in central data centers might be pushed closer to the user device, reducing latency, improving efficiency, and unlocking new applications, such as immersive reality, distributed AI inference, and real-time edge analytics. Nokia has framed this as putting an AI data center into everyone's pocket. From a strategic viewpoint, this aligns Nokia with the structural tailwinds of the AI supercycle, the growth of edge computing, demand for private networks, and the broader transition from 5G to 6G. For Nokia, whose growth in its traditional network business had been under pressure amid competitive intensity and slowing telecom capex, this offers a new growth vector. Recent deals such as a multi-year 5G AI contract extension with T-Mobile US Inc. in the US reinforce that Nokia is being chosen by major operators for transformation initiatives. Financially, Nokia has reported signs of stabilization. In the recent period, Nokia disclosed optical networks revenue growing at double-digit rates driven by data center interconnect demand and hyperscale-driven build-out. While Nokia's core network equipment business still faces margin pressure and some geographic softness, the investment from Nvidia and ability to pivot into higher value segments improve the risk-reward profile. The infusion of capital improves Nokia's financial flexibility and gives it room to invest in R&amp.D, software, and higher margin capabilities without solely relying on thin hardware margins. But this is also not without sizable risks. Execution will be critically important. Developing and commercializing AI RAN solutions at scale is complex. Operators must be convinced of performance, reliability, cost-effectiveness, and integration with legacy networks. Nokia must prove that its modular AirScale architecture and new AI-capable software can be deployed profitably and at scale. Competition remains fierce. Rivals such as Ericsson, AB, and Huawei continue to vie for telecom infrastructure market share, while other emerging players in Open RAN and edge compute may offer alternative solutions. Nokia also needs to translate this strategic pivot into visible revenue and profit growth over time. Crafting high-margin software business models out of heavy hardware provision has proven challenging in telecom. Valuation is another key facet. The market has clearly re-rated Nokia based on this news and future potential. Its shares surged more than 20% on the announcement of Nvidia's investment. As optimism climbs, expectations climb too, meaning future delivery must match narrative or risk disappointment. Investors should monitor key metrics such as bookings of AI RAN contracts, software as a service revenue growth, gross margin improvement in higher value segments, capital spend efficiency, and cash flow generation. putting it together. Nokia today offers a compelling turnaround plus growth story rather than purely a legacy telecom hardware play. For investors with a multi-year horizon and willingness to accept execution risk in exchange for structural upside, Nokia may be a strong candidate. My recommendation is that Nokia is a moderate buy at this juncture. The Nvidia partnership, the pivot to AI and 6G, and the improved growth profile provide meaningful upside. However, this recommendation comes with the caveat that the reward is not immediate and that patience is required. Monitor upcoming contract wins, deployment milestones, and margin improvements. In closing, Nokia's 2020-25 story is about transformation. From network gear to AI native infrastructure, from hardware commoditization to software, edge compute, and data center networking, the company is aligning itself with next-generation trends. If Nokia can execute, the market is already giving credit. For long-term investors, this may be an opportunity to participate in a legacy player reinventing itself.